Hello, this is Bill Bateman and welcome to week 3 of MBA Financial Reporting and Analysis. I thought I'd try something a little different this week with a video because I want to give you a little bit of help getting started with the assignment this week, Balance Sheet Detective, and it's better done with a video than trying to explain it in some document. So anyways, welcome to week 3, and we've got a little bit of reading to do this week. We are going to finish up on our readings for the week, or we're going to finish up on the readings for the income statement this week and take a look at the statement of cash flows. So I've got the first article, Cracking the Code of the Income Statement, and that's a little deeper dive and reviews some of the stuff we saw last week. And then 2 articles, one that talks about costs and expenses and another one about recognizing revenues and expenses. So in addition to that, we'll take a look at the statement of cash flows with 2 readings that you see here. The discussion board for this week is going to ask you to talk about a statement that's made in the Cracking the Code of the Income Statement article. And down here in the middle of the page 8 it says, the one big rule that should be in the forefront of your thinking whenever you get in front of an income statement is that many numbers on the income statement come from estimates and assumptions. So I want you to give this statement some thought, give your ideas on what you think the author was trying to say, and then find some examples, do a little bit of research and find some examples where you think the accountant could have made estimates and assumptions and how that would have affected the results that were reported. During the middle of the week, I'll give you another discussion question, so you can be looking for that, and that'll pertain to the cash flow statement. The case that's due this week is the Balance Sheet Detective, and this is an interesting case, and I want to spend just a few minutes talking to you about that. You'll go through and you'll read the description of these 9 companies. Some of them will be familiar to you, some of them will not be. But they'll give you some clues as to what this company does in real to make money, their business model. And you know that I've made that comment before. You have to understand what a company does to make money before you can begin to analyze it. Then you'll be giving 9 balance sheets in what we call common size balance sheet order. And what this is taking the individual accounts and showing them as a percentage of total assets. So you see for company A, what this means is that cash makes up 11% of their total balance sheet. One of the things that you have to watch for here is this number for plant gross is the gross amount before depreciation. The number that would be included in this 100% total would be net, so that's after depreciation, so be clear about that. We'll go back out and take a look at some of these descriptions to get started with this case. Haven't found a better way to do that yet. I think this will do it. There we go. The first one that you have to be aware of is EDF says that it was a large French utility company that was recently privatized via an initial public offering. What this means is that this was a government company at one time and now is a private company, and they used an initial public offering to get their funding. So this is always a little bit confusing for students. And so we'll just clear that up. It was a public company in terms of it was used by, it was owned by the government. It's now owned privately by the shareholders. The company that I'd like to look at for Google, for our example here, is Google. And you'll see that Google is profitable, cash flow is positive. We know what their primary activity is. That's advertising, search engine services, and intranet solutions. And it also has a number of websites and other content. So everybody's familiar with Google. So let's take a look at these 9 balance sheets and see if we can identify Google. Now, the first thing that I'd say that we might know about Google is that they've been profitable and had good cash flow. So you should be able to identify that in cash. Cash should be higher than most. The other thing is that they're a service provider, so they shouldn't have a lot of inventory. So we should be looking for companies that don't have a lot of inventory. Plant, property, equipment, they're not a manufacturing company, so that would be on the low side. They've been cash flow positive, so they should have very little, if any, debt. And their retained earnings should be moderate. Newer company, but with good, solid retained earnings over time. So there's really two companies that make up those criteria, and that's F and G. But if you look through it, there's some clues here that may distinguish Google from, or I should say F from G, and that would be the amount of retained earnings here. Google has 19% retained earnings, where in reality the company G would have negative 38% retained earnings. So by looking at different metrics here, we can identify that probably F is going to be Google. So what you'll do then is you'll go in to course materials and pull up the balance sheet detective worksheet, and that should pull up into Excel. And all you'll be required to do is identify the companies with the letter from the description or the balance sheet. So in this case we decided that Google was F, and then more importantly you need to come up with two clues as to why you chose that company. So I might say that Google is a service company and has no inventory. That would be one clue. And we'll change the spelling there to Google. And then you have to come up with another clue. You can't just say that something is high or something is low. That will not get you full credit on this assignment. You really have to give a good explanation, a sentence or two, for each one of your clues. The last thing that I want to show you is the rubric for this. So here we have the rubric for the balance sheet detective, and you'll notice that you can get up to 25% of your grade will be determined whether or not you identified the correct companies, but 75% of your grade will be determined by whether or not you had good clues. And you'll see that depending on the number of correct companies and the number of what I call valid clues, will determine your grade. So again, you'll fill out this worksheet completely, and you can send this right up, you turn it in. You don't have to convert it, you don't have to do anything to it. Make sure I can read it. Sometimes students will put in more verbiage and won't expand the width of their lines. So make sure that what you see is what you get, because I'll only grade what I see on this spreadsheet. I won't try to dig in and convert it for you or make it clearer. So that does it for this week's class. Look forward to seeing you on the discussion boards, and have a great week.